Good morning, everyone, and welcome to the European crossover webinar. And we've had some European data come out this morning with German retail sales, which came in a bit weaker than was expected, obviously keeping the woes up for the euro, as well as French CPI came in, same thing also, a little bit weaker than expected. And then follow up that with a Spanish GDP coming in at 0.5%, 0.5%, a little bit better than what's expected or what that we received. And then just coming in right now with current account balance Spanish, but no release on that yet. Now, at the bottom of the hour, we do get Bank of England consumer credit. And at the top of this next hour, we do get HICP flash. That'll be out at the top of the hour. As we roll into the States, we will have personal income and spending, as well as course PCE. And let's see here, we do have Canadian GDP, as well as pretty big day, Chicago PMI, and then University of Michigan, but that's going to be final readings on that. Move this all the way. As I mentioned, we do have the euro a bit weaker, and then also importantly is with the cash dollar index. We've mentioned about this 97.89. That's a key, huge weekly pivot. We're going to see if we're able to go on and maintain above that. And let's see here, obviously with the cable, once again, making a run above the 30.80. We'll find out whether or not it's actually going to be able to do it. Maybe the third time's a charm, and also Kiwi, new lows in the Kiwi, and then also looking here with the Australian dollar. Both these really taking a move here, now below 67 cents on the Australian dollar. Yeah, let's go and take a look here. Speaking of which, we'll start out with the Aussie. Aussie and Kiwi set for the biggest weekly loss in September as virus haunts. The Australian New Zealand dollars loitered near multi-month lows on Friday, poised for their worst weekly losses since last September as the export-led currencies bore the brunt of selling over the spreading China virus. The Australian dollar, often traded as a liquid proxy for the Chinese yuan, dived 1.5% this week to be on track for its fifth straight weekly loss. It was last flat at 67.22. Right now, current prices, I think you saw that was just below 67 cents right now. The Kiwi fell 1.8% this week and was set for its worst weekly showing since late September. While concerns about the economic fallout from rapidly spreading coronavirus have kept investors on edge, hopes China, the epicenter of the epidemic, could contain the disease, provided some relief on Friday. The World Health Organization declared a global emergency on Thursday. Director General said the greatest worry was the potential for the virus to spread to countries with weaker health systems. Yet investors took heart from the comments from the drastic steps Beijing was taking would reverse the tide and contain the outbreak. He eased some mushrooming fears of a global pandemic, ordered by suggesting the number of outbreaks is relatively small. Still, the market is left with the struggle to quantify the economic impact of the coronavirus. The ANZ economists, China's gross domestic product growth to temporarily slow to 5%. For Australian UBS economists, estimate hit at least $1 billion to the country's services export from a 2-month and a half halt on China package tours. Worries about a marked growth slowdown in Australia from the coronavirus and prolonged bushfire seasons have led investors to bet the country's central bank will lower interest rates further. We shall see whether that takes place at all. The cash rate is already at an all-time low of 0.75, following 3 cuts last year. And battered Asian currencies arrest a slide on the WHO confidence. The Asian currencies steadied their slide on Friday as the WHO's confidence in China's response to a rapidly spreading virus tempered over a jump in infections. the WHO said Thursday that the coronavirus outbreak was a global emergency. And we've already mentioned about the Australian and the New Zealand dollars, that both Aussie and Kiwi are what I've called the whipping boys. If you like expressing concern about the spreading of the virus, it has the potential for global economic ramifications. And let's see, in comparing it to SARS, many are looking for the experience of the severe acute respiratory syndrome. This time, the number of cases already exceeded 8,000 logged during the SARS crisis. The official response has been far more drastic. I think the impact will particularly be front-loaded and likely larger than the SARS outbreak, said Paribas economist said in a warning note warning the current quarter's year-on-year growth figure in China could come in below 5%. We do not know exactly how the situation will evolve over the coming days and weeks and months, and therefore what the duration of the shock will be. The risk appears to be skewed to the downside, with scopes for the potentially harmful mutations of the virus due to a large number of infected individuals. Separately, the Bank of England held straight steady and sent the pound higher, 0.7 to a week high. Britain's market watchdog, however, is investigating the move because it began just before the bank's announcement. With that, we're going to move into the analysis, and we'll start here with the euro. So the euro closed above minor resistance level 1028 on Thursday. The key resistance remains at the level of 1058. A close above 1095 will negate the downside momentum. Support for Friday will be 1005. We're still locked into this very, very tight range here with the euro. We were able to get, you can see here with the close on Thursday, able to get just above the 1028 area here, but you can see here, there's no follow through here. If we were to make a move higher, 1058 would be that bias chart resistance we've had for the last 2 days now for a third day. The only difference is we're going to move the support up to 1005. And you can see Head and Shoulders is still in effect. I mean, we might even easily slide right back. And it's not going to be good news if we close below 1009, because then we'll have our lowest weekly close. So 1005, once again, is going to be the bias chart support here. Obviously, if we close low, it really opens that door for us just to go and move on. I think if we do get a close below, 1009, you can see right here, it'll be the lowest weekly close. That's really going to open the door now for us just to make a run at this point. And then that would actually coincide with the cash dollar index being above 97.89, which would open that door for us to move higher, conversely speaking. So cable is once again for the third week in a row knocking on the door of the weekly resistance level of 3080. Is the third time a charm? We will know in the fullness of time as of Friday's close. Intraday resistance is going to be 3123. We're above that right now with support at 3035. Now, we've been here before. We all know about that. This is the third week in a row. And for the third week, or could it be the third week again? Whereas we had data released the 2 prior consecutive weeks. And, at the time, 2 weeks ago, we were at 3080. We were just above it. Looked like we were going to close above it. And we turned around and failed. Then last week, we were actually, you can see here, at 3166. And once the data was released, we just take just above 3166 and then immediately started selling off. I mean, within 5 minutes or less, maybe about 3 minutes, we were already down to 3133, and the rest is history as we just kept going lower and lower. Now, that being said, it really set up a good sell-off for bears, and we talked about the focus of this week being the pivot at 29.80, and they did come down here to the pivot, but surprisingly, they held after those two failed weeks. So here we are back above 30.80, which is going to be the weekly support, not weekly support, but a weekly resistance level, and we'll find out whether or not we can go on and close above that. So we shall go on and find out. Resistance we have is 31.23, but right now the market is above that. So we'll go and take a look on the 2-hour chart, see if we find something a little bit closer. Coming in right there. Let's just go and call that 31.47. And support's going to be 30.35. That seems like that's a long ways off. No, well, you know how quickly we sold off last week from 31.66. We actually shed 100 pips by the close, so it's going to be 30.35. And we'll see if we fail again. Although after this is the third time, and they held up pretty good during the week, so we'll see what happens. The Aussie broke to new lows, but managed to close above the bias chart support of 67.08. We're obviously below that now. A break lower would challenge the 3-month low of 66.70. Bears are in full control, although an oversold bounce is possible. Resistance is going to be 67.64, followed by 67.87. Well, we're below 67 now, so the door is open now, which is going to be support 66.70. And resistance at 67.64. And you can see it just looks woeful and in quite bad shape. We've actually now come broken below the trend line. We broke this area here, which was 68.48, and certainly looks like we're making a challenge for those lows. The Kiwi just closed below the key support level of 64.93, which is also was the breakout level for this move. A lower close on Friday will negate the bull case. Support is now going to be 64.77, which now we're below that, followed by 64.12. Resistance is now 65.44. So this was the breakout area. This is a key level to 64.93, and we've now just basically given up everything to a certain extent. I mean, it's not as bad as the Aussie, but you can see something that was quite bullish. Remember the take that we had, this good 3-week run, and basically we've given it up. And we closed yesterday below 64.93. A second close below that turns this thing completely bearish now, or actually, well, not completely bearish, but it fully knocks off the bull case. Support you can see coming in right there. Actually, we'll give it right there, 64 42, call it 64.43 for support. And resistance. I don't see how things are going to turn around. It's actually going to be the low of 2 days ago, which is going to be right there, 65.05. And you can see this reversal of fortunes here. We had broken out and things look so great. Like I said, phenomenal 3-week run, only to just give basically almost all of it back. The dollar CAD remains in bullish mode. The close was on resistance yesterday at 32.07, right there at that level. Friday's resistance will be 32.40, and support will be 31.56. Well, we look like we're well on our way. I mean, we're clipping along here. So once again, as I mentioned, resistance for today is going to be at 32.40. And support 31.56. 31.56 for support. Look right there in that break there. If it were to come back, you can probably make the case before there. So considering how we're still moving higher, you would actually move support right here, right there. Call it 31.65. And you can see here we're just moving along. We closed right at 32.07, and we've added on to that and certainly making the potential to move on up to 33 cents. So the dollar peso held up well overall, considering the rally in equities. Immediate support comes in at 1869 with resistance at 1884. We have come off on the S&Ps. I mean, we've made it up to right at 32.97. We're down a decent amount here, 32. Well, now 32.80. I was just seeing 32.79. But we still haven't mustered enough. It's almost as if the peso doesn't believe it. But as I mentioned, resistance is going to be at 1884. And support here at 1869. Now, the dollar yen eased back as U.S. interest rates went to new recent lows. The dollar yen found support at just above 850. The pair closed in the 890s as equities rallied. Resistance is going to be 918 with support at 872. So we had the 918. Only difference is we're going to move this to 72. Here's a problem is that we do have interest rates that have moved lower, and that may keep up the pace. But I'll tell you what, this was not good news here. Japan's Q4 output falls at the fastest pace on record. I mean, this is huge. I mean, it looks really bad here. And they were saying, you know, the concern was, it says after the sales tax hike, it was expected to be weaker than previously projected. But for this to fall off at the fastest pace on record, you know, the BOJ held things, held rates steady, but you got to think that they may be considering taking action, and that's really going to put a bid under this pair. So something you got to keep an eye on. I mean, the downside ultimately may be limited, even if we do fall, considering how weak that in case the BOJ takes action. Now that may not come around for a little bit. So maybe in the short haul over the course of the next 10 days, 2 weeks, if we see equities come off, continue to come off. I mean, we're rallying, but we're coming off equally. We may go on and see this slide back, but I'm not sure about it completely falling out of bed. We shall see, unless the coronavirus gets much worse. But as we said, we're looking for resistance at 918 with support at 872. Now moving on to the cash dollar index. The dollar index closed just below key weekly pivot 97.89. For the dollar to sustain the upside momentum and the rally to further itself, it must close above 97.89. Resistance will be 98.18 with support at 97.61, followed by 97.42. We're at that key weekly pivot. We need to close above that to try and give us a further push. We shall see what happens by the closing bell. I'm surprised we're not even higher, but then again, the cable's been holding up rather well, but we shall go on and see. One moment. So support below that's going to be 97.61 with resistance at 98.18. And just bear with me real quickly. Bear with me one moment. Okay, thanks. Let's get on with this. So we do have UK data at the bottom of the hour, and Let's go on and move on to the cross rates. So we continue to see this Kiwi yen weaken, and we're pressing lower. Pretty clear where they're going to, right here at this level, which is going to be right there, 70.29. Let's go and mark this off. And boy, what a fall this has been. Let's go and take a look at it, see if we can get a confluence on a fib. Well, between the 38 and the 50%, the 50% is all the way down here to 69.92. They may eventually make it there, but at least for today, that's going to be our resistance. I mean, our support level. And resistance is going to come in right there. It's going in. $70.77. And we've now gone bearish on this thing, or at least the bias is. And let's go move into the euro yen. Well, we're trying to hold up in here, but we're not doing much of a good job at that. And resistance comes in right there. It's still a fairly tight day. Right there at 19.95. Let's see if we can't see something. I think we almost have to make that a little bit lower. Hang on. It's going to be there, 1988. And I want to quickly move into the UK, into the cable. Got that UK data coming out. One moment. There we go. Got the daily here and the 2-hour here. and that just came out. Consumer credit came up 1.218 billion. They were looking for 900 billion, and not a whole lot of change. I mean, we've come off the high a little bit, but not the kind of activity we saw last week when they immediately sold off. Let's go moving back into the, and Guppy just paring back a bit. Starting on still strong. And looking at the euro yen as far as resistance, it certainly doesn't look like we're going to turn around, but if we did, even a little bit of short covering, at least on the short haul, it's going to come in right there, 2056. And let's go into the euro odd. Well, we are up and up and away, up and away with the euro odd. More to say about the weakness of the Aussie than is any strength in the euro. So let's go and take a look here at the fib to see if we can find anything here. That's really not a good fib because this is the actual low off that. So it would not be good use of the fib at all. At all. Resistance set is going to come in right there. 6506. 6506. Support has come down here, coming off of this line here. So support would be 63.77. And let's go and move into the Euro Kiwi. %50 comes in at 71.59, and resistance before that basically right there. The there is some volume coming in right here. Let's go with that. 70.97. 70.97. And support, that's clear. It's going to be this breakout area here. 69.66. Let's move into the RCN. And this has continued to go and drip lower in itself too. Let's go and see if we can find anything on the fib. $72.46 is going to be the 61%. There is a little bit of volume coming in right there, and that comes in at 72.73, which would just take out the week's low. So let's say 72.73. And for resistance, right here at this bar coming along here, you can see this little bit of volume here. Think of it this, if you were short, this would be your risk right there, which would be 73.45. 73.45 for the resistance. And let's go move into the guppy. Well, we're holding our own right now. We released that data, unlike the last 2 weeks where we've seen the markets sell off with the data. We're actually holding our own, so it looks like they may try with the third week in a row, try and make a stand here. You can see all this volume coming across here. Right there at 43.34, 43.34. Right there, 42.64. 42. 64. And let's go on and finish up with the sterling odd. We're still pressing higher. Resistance is going to be right there. These closes here. We're right there, 96.43. So 96.43. Boy, what a run. See? No, it's 96.49. With support coming in at that high. Actually, yesterday's high, which would be 95.46. Actually, drop it just a little bit lower. 95.32. 95.32. We are seeing equities come off a decent amount here from the Asian session highs. A little bit of support here. Coming off of that area here. And resistance is going to be coming in right here, 32.82. We've already come off quite a bit. And before there was going to be right here at 32.80. We've come off quite a bit. Boy, we have. And then going back here to the majors. Dollar-Yen's not off that much, 8.95. Even though the spoons are giving off quite a bit. And Euro just kind of hanging around here, 10.29. You can see here, not a whole lot of movement. And cable has come off. We do need to close above 30.80. We are coming off a little bit, not a whole lot, but we are coming off. We'll see how that holds up. But that'll be it. Good luck trading for the rest of the day. We'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.